Hello and welcome back to Lunch at the Markets. Today we're out writing covered calls on our long stock position. A covered call is when you already own the stock. That's what being long means. And then you sell an out-of-the-money call against it. Out of the money means that the stock hasn't hit that particular price yet. They call the price the strike or the strike price. For instance, we sold the JBL April 1750 strike for 70 cents. That means that if the stock trades above $17.50 by the third Friday in April, someone will likely call our stock away from us at the agreed price of $17.50. If the stock does not reach $17.50 by the third Friday in April, we get to keep our stock and the premium we collected for selling the covered call. We're collecting 70 cents for putting on the trade, so that means that we will effectively sell the stock at $18.20 if the call is exercised. We get that by adding the $17.50 strike to the 70 cents we get for selling the call, and voila! We sell the stock for $18.20, a price we're perfectly happy selling at because we bought the stock for $14.29. That means we'll make almost $4 a share on the trade, and that's not a bad profit at all. The other stock we wrote options on today was Akamai, symbol AKAM. We've owned Akamai from 1815, and the stock now trades at $29.34. No need to be greedy. We're already up over 50% on the trade and we want to just get a little more, so we're selling the March 30 strike on Akamai for 44 cents. This means that we'll get $30.44 total for the stock. Remember, it's the payment we receive for the option plus the strike we sell the stock at. Not a bad way to cap a winning trade. If the stock doesn't get there by March 20th, that's the third Friday of this month, then we keep the stock and we'll sell more options against it next month until we finally get it called away. Don't forget, if you're up huge in something, you may want to use some of the money you took in for selling the calls to buy puts, in case your stock goes the other way. You can buy the March 27 puts in Akamai for 9 cents. You'll still take a credit, meaning you'll make more on the call than you spend on the put. But if for some reason the stock rolls over, your 9-cent put will become much more expensive and you can sell it for a gain. So that you can still make good money on the trade for March. If things get really hairy, then you can exercise the put and make someone take it for $27 a share. We bought at $18.15, so we'd still be massively profitable on the trade even if we had to put the stock to someone at $27. If you add a put to the trade, then it's called a collar. We've talked about collars before, but it never hurts to brush up on our options, especially with the market wandering around in no man's land without a significant direction to be seen. The market may be waiting to see what earnings season in April looks like. It's right around the corner, so we'll see what happens. Until then, don't forget to manage your positions, own your puts, sell your calls, and don't fall asleep on options expiration this month on the 20th. Thanks for tuning in, and we'll see you tomorrow.